Everybody, this is Jim at SB500chart.com. It's Sunday early evening, a little bit after 6 o'clock, and we're going to take a look at what happened in the markets the week ending March 4th, 2016, after I remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, we're going to start out here on a 30-minute chart, and you can see that the S&P over the past few weeks has, well, we'll look at an hourly chart here. You can see that the S&P has bounded nicely off of this double bottom. And remember, this double bottom pattern implies a target of about 2090. Okay? But it's my job to read the chart, and along with the positive, and that is double bottom, breakout, target of 2090, I also need to point out the potential negative. And I bet you can look at this chart and spot what that potential negative is pretty quickly. And what it is the possibility that since the second week of February, we have been in a rising wedge, where this is our support line and this is our resistance line. And if that is the case, and if this wedge does what wedges tend to do, then that would tell us we should not really be getting over 2060, which is the apex of this wedge. And whenever this line breaks down, there will be pressure brought to bear on the S&P to take it down to where the levels were prior to the formation of the wedge. And I'm just telling you that's the textbook definition, that's the textbook inclination of this pattern. So we have double bottom that says 2090. We have rising wedge between this line here as resistance and this line as support that says, hold on, if we break through this line here, then we should be coming back to the low 1800s. So something is lying here, or maybe we do break out of this wedge, then back test, have a second rally after that that actually would come back, rather than back testing the broken line, it would probably come back to this resistance line right here by way of just kind of a snapback rally from any break of this line. Maybe it's possible that both things can happen, is what I'm saying. So what that would look like if I can slide this chart. Why won't this chart slide for me? Well, so much for that. So anyway, in other words, what we could see is let's say we get out to here, then we have a breakdown, then we rally to our target somewhere in the next 2 to 2.5 weeks. Then we see some selling pressure taking over. So it's possible that both things could be true, but I need to point that out. This is bullish. This so far is bearish. Now what could change? Well, what could change is if this week we get up over this line, putting us, instead of being in a rising wedge, just putting us in a rather steep channel. That is possible. So that's why we look at the chart. That's why we view the chart on a daily basis, and that's why we're not afraid to make a different call, because hey, the chart changes. It just changes. So you'll remember back about 3 weeks ago, we were down here getting underneath our 1850 quote line in the sand, and I said, I'm changing my mind on that. I think if we bounce around the low 1800s, if we come down to this level right here once again and then break up out of that level, maybe that's one last chance for the S&P to save itself, and that's exactly what happened. I frankly was about ready to say it's game over here, but I just looked back and I said, no, maybe we're dealing with something else. So how did the week go? Well, I think the week went pretty well. It's pretty basic, to be honest with you. Um, we came out of the previous week having just gotten over our double bottom neckline for the second time. We spent a little time underneath that on Monday. If we zoom out just a little bit, however, you can see that we did identify this support line right at about the time we hit that bounce. Um, but it did work, and then for the rest of the week, um, we saw a couple little small patterns along the way here, but the rest of the week was really just rallying off this support line right here. So I think it was a pretty good week. We saw a couple very small patterns along the way, um, but for the most part, it was just sort of what one would expect when you're getting over a line of resistance. This week it'll be interesting to see what happens, and what I'm looking for is what takes place between these two lines. Whatever it is, it cannot go for too much longer because these lines intersect a little over 2050 in the mid 2050s, and well, actually it's probably more like 2060 if we extrapolate that on up a little bit, and that happens in about 8 days. So it's either we break out over this line or we break down through this line. And right now, um, it's sort of anybody's guess. And the reason, again, is because we do have a target up here, 2090. Okay, and that would seem to be saying there's a good chance we can break through this. But on the other hand, we've got this rising wedge, and it says that's resistance, and it says this is support. So the wedge is bearish, saying we break this line, we start to come down in a fairly serious test of support, whereas the double bottom scenario, which is still there, right here, that says 2090, and this wedge and the double bottom are telling us two slightly different things, with the possible exception that that's what I meant to do. Why couldn't I do that a little while ago? With the possible exception that we break through this wedge, then have a very steep and aggressive post-breakdown rally that ends up taking us to 2090, and that could happen by right around the beginning of the fourth week of March. So I'm going to leave this line on the chart right here. That is our target line now. We'll just make it orange. And for the most part, guys, going ahead, let's just keep our eyes on these two lines, this support, this resistance, see which one of these guys gets taken out, and whichever one it is, we'll start to formulate our next thought on this chart at such point in time that happens. So there's your video for the week ending March 4th, 2016. Thank you for taking time out of your day to watch this, and thank you for your very kind support. Take care.